We've been a value add provider of capital to these emerging consumer brands and services. You're seeing tremendous opportunity with new brands out there really meeting the needs of the consumer kind of out there. For me, I'm very excited by this space today because I see this great opportunity, but I also see that only a handful of folks really being able to take advantage of that.
Thank you for joining us for our third Thursday Themes conversation this month. I'm Michael O'Keefe, Chief of Staff at CAS Investments, and I'm joined today by Mike Mauze, co-founder and general partner of VMG Partners, a leading firm working with entrepreneurs in the consumer brands and consumer services sectors. Mike, thank you.
Thank you for having me.
Why don't you start by giving us a broad overview of your firm and strategy?
Sure. I think, let me start really from the beginning on that. I was an investment banker at the start of my career in the consumer product space out there. And I worked for this wonderful man named Herc Sigalis, big Greek guy that spoke 6 or 7 languages and really dragged me all over the world being these great consumer product companies. After I graduated college, I'd only been out of the country once or twice. And so it was a real eye-opening experience for me, meeting all these CEOs from really around the world. And what I learned was really 2 things that really still stand true today, and is really kind of the bedrock of what we do at VMG out there. And that is big strategics. They generate a lot of cash out there from their heritage brands on there. And they're not very good at developing new brands out there. Over the past 35 years, it's really been the entrepreneurs that really develop those brands with the big strategics buying them. And what I realized early in my career was that there was really not an institutional market to provide capital to these emerging brands. It was really done very much in a bootstrap way and friends and family way. And what I wanted to do when I wanted to make a pivot in my career in 2000 was to move away from the investment banking area and move into providing capital to entrepreneurs and hopefully be a value add player for them. And that's how we've really built VMG over the years. We've been a value add provider of capital to these emerging consumer brands and services.
That's incredibly helpful. And the shift from kind of IB to focus on the entrepreneurs in the space is something we see a lot and valuable in the industry. So, we just went through a diligence session with VMG, and we've had the pleasure of going back and forth. The one question that we ask as a firm, first and foremost, in every single investment discussion is, what's the worst case scenario? How do we get hurt? How does this blow up in our face, et cetera? So, if we can live with the worst case scenario, the upside will typically take care of itself. How does VMG think about the worst case scenario when you're looking at branded consumer type investments? And
Yeah, Michael. So what we kind of do is, the worst case for us, if we invest in a bunch of fads, a bunch of brands that have a very short life period, that during our holding period, they don't grow to a size where we'll be able to sell them to a strategic buyer out there. So that's a question that we really wrestle a lot with, is fad versus a trend. A brand that's on a trend should continue to grow and should be of strategic interest to those big CPG companies out there. So that's what we kind of wrestle with. So the downside really is if you ended up with a portfolio of faddish brands that seem to be doing well when you're making the investment, but over time, the consumers lose interest with them, and therefore the strategics would not be interested in acquiring them. So what we do is do a lot of research around those questions there. What we've tried to do over the past 20 plus years is really build an ecosystem of relationships with retailers, relationships with managers, relationships with data providers, and with strategics as well. And when we're looking at a category and we're looking at a brand, we really touch all those members of that ecosystem to get their sense as well as to whether this is a fad or a trend for a brand out there. And based on all that information and the time we spend with the entrepreneur, fortunately, I think we've made, mostly correct decisions over the past 20 years.
Yeah, that's helpful. And one quick follow-up question before we move on. I'm sure a lot of the investors watching would love to know, what are the most easily identifiable factors for fads or, maybe really successful brands that are diamonds in the rough that don't fall into that fad category?
Yeah, it's a little bit of an art and a science kind of to the two. The art is really the experience of seeing this over so many years. The science is really digging into the empirical kind of work on that brand. But the essence is there true consumer adoption of this brand? And is there a group of passionate consumers out there? And I think you can do research and spend time with consumers and retailers to really understand that that's true out there. And that is really the crux of a lot of our diligence when it comes to the brand work, is to make sure that it is on a trend and not just that fad.
Yeah, absolutely. So along the same lines, what does VMG view as the largest challenge or the headwind to its business and, and the strategy in general? And what are you doing to overcome that from an investment perspective?
Well, clearly, kind of once again, getting back to that fad and trends, making sure that we're on a trend there. And then the key is really making sure that we have kind of that right team in place and working with them to build the right distribution channel and the right brand work given for that particular company in that sector that it's in out there. And the headwinds can be significant in this area. And that's where I think it really benefits value added and experienced investors kind of in this space. Is knowing when to lean into certain retailers, knowing what the cost of getting into those retailers in, how to minimize some of those costs and some of those risks of moving into a new retailer. This is the kind of work that we do with our brands as we try to map out their future for the 3 to 5 years that we hold them.
That's helpful. One quick follow-up question. When you talk about mapping out a brand's future, what does that look like? Put that in
Yeah.
terms that an investor at home could understand.
So what we want to do is, well, taking a step back. So when entrepreneurs are building the brand, they're kind of cutting corners during the early years, which you can completely understand out there, is that they are trying to save every penny that they can while they're going through a process there. And so what we want to do is really lay out a 3 and 5 year kind of playbook for each brand and for each investment opportunity that we make out there. And what we want to do is build what we want that brand to look like in 3 to 5 years and make sure that we have all the empirical data to kind of support why a strategic should want to do that. In effect, we're building the data room for exit starting on day one. Examples of that, Michael, would include making sure all the trademarks are in place, making sure that all the regulatory issues are in place, making sure that the contract manufacturing relationships are properly documented in place, making sure they own all the IP that they think that they own and make sure that's documented. As I say, when we sell a brand, after our kind of at the end of our hold period there, what typically happens, Michael, is the CEO or the head of a division, one of these big, consumer product companies, gets all excited about the brand. They're like, this is exactly what we need. It fits in our strategy. And then they send 20 to 40 people into the data room. And these men and women, they don't care if they do the deal or not do the deal. And in fact, it's probably, more challenging on their job if they do the deal. And we need to make sure that everything is in place so there is nothing that a naysayer would want to take value away or not do that transaction.
Yeah, that's incredibly insightful. Thank you. Kind of a close cousin to that same question. There's a lot of variety in the broader macroeconomic landscape, the political landscape, the geopolitical landscape today. You've got talks about rate cuts, you've got an election coming up. How do all those factors come together to inform the investment decisions you're making today? Are you altering your approach at all? Is it not altered at all? Talk to us about that.
So we really don't alter it very much. As I always say, I always get nervous when I walk into an entrepreneur and they have the Wall Street Journal sitting on their desk out there. I much prefer somebody just to have the sports section of the USA Today on there. I don't want them to look to the macro for excuses on why they're not executing on their business kind of on there. I think in any economic environment, a strong entrepreneur with a strong leadership team should be able to execute on that brand and that opportunity there. We're not talking major price points for our types of businesses there. Anywhere from $10 to a high-end cosmetic or beauty brand, beauty product, $50, $75. These are price points that should be attainable for a large amount of U.S. consumers kind of out there for brands that they really matter about. So we really don't alter very much. What we really want our CEOs doing is really focus on the day-to-day execution of the business, out there and recognize that a changing economic landscape just provides opportunity for them.
Yeah, I think that's a powerful lesson for investors in general to pay much more attention to the execution side of the business rather than the myriad of factors that we see in headlines from a variety of sources every day. So
no, I
that's
think that's
helpful.
right, Michael. In our world, a lot of people talk about categories. Out here, is the beauty category a good one? Is the sun care category a good one? Is the beverage category? And one of the mistakes that I think investors often make is that they invest in a great category, but in a mediocre company. And we always want to at BMG to really dive into these companies, really understand them, and we want to invest in the very best companies in our sectors, and not just let that sector momentum carry what can be a bad or an unattractive brand. Because at the end of the day, these strategic buyers want to buy the leading brands in those categories.
Absolutely. So we focused a lot on downside and headwinds. Let's flip that narrative a bit. What do you
Yeah.
see as the largest tailwind or tailwinds for consumer right now? What excites you the most in your space?
So, I hate to say it has been one for 10 to 20 years we've been excited about, and that is the consumer is on this journey for a healthier lifestyle. That comes from foods that they're eating. It's come from beauty products that they're putting on their body. It's coming from the services that they're doing, going to the gyms, et cetera, kind of out there. And what I find is that a dramatic shift in where the consumers are spending their dollars today versus where they were 20 or 25 years ago. They're really trying to find out those healthier brands and healthier services to do that. The key for us at BMG is not to get too far ahead of the consumer kind of out there. And so over the years, we tried to be one or two steps aligned with these entrepreneurs who are seeing these emerging trends so that we can back those trends over that 3 to 5 year period when real change is taking place, so that then at the end of that hold period, the strategics are ready to invest into that trend.
Yeah, that's excellent. You know, you've touched on a couple elements here, but one of the benefits of being a sector specialist like you are is you spend all day focusing on your space. You read all about your space, you live in that space. Are there any
Yeah.
factors that, generalist investors are not really paying much attention to that could really surprise to the upside when it comes to consumer and branded consumer specifically?
I think the biggest kind of change that's occurred over the past kind of 10 years out there is really the rise of the omni-channel brands there. I think when people think about an individual person probably has one or two places where they shop, maybe three places where they shop. But when you take a step back and you look at the landscape that we have today in the consumer space, we're seeing a wide breadth of opportunities for brands to really develop relationships with consumers out there. And one of the things that's I think been one of the very interesting for me as I've kind of continued to grow and learn as an investor is how to build brands that need to be omni-channel, that need to be across many of these different distribution kind of channels, whether it be Amazon, Walmart, Whole Foods, et cetera. Back when we first started investing 20 years ago, they might be in one or two of those. Today, they may be in four or five. And how you work with brands to meet the needs of four or five different different retailers and different online marketplaces is a real challenge, and one that I think kind of generalist funds would really struggle with without having those relationships at each of those types of distribution outlets.
Yeah, let's take that one minor step further. So, you talk about the shift in consumer landscape in general from that one to two retailer maybe to the four to five landscape. What does the next 20 years look like? When we call you up a decade from now, does that trend continue? Does it stop at four to five? What does the landscape look like given the trend?
Well, I think you're going to see continue to expand. I think you're going to continue to see kind of more specialist marketplaces kind of develop, whether you're an athlete and you're going to want a certain type of curated online experience. Beauty products will continue to develop online experiences. So I think consumers are going to have both a very breadth of products that you'll see at an Amazon or Walmart.com or at a Costco, and you're going to see a very curated marketplaces kind of out there. And I think you're going to continue to see that trend over the next 10 years.
Yeah. So pulling all this together on a scale of 1 to 7, 7 being the absolute best, 1 being the absolute worst, where would you rate the current risk reward in your space?
So from an opportunity standpoint, I would say it's a six, kind of out there. You're seeing tremendous opportunity with new brands out there, really meeting the needs of the consumer kind of out there. But I would bifurcate and say execution is more challenging today. And then I think that investors in this space need to be able to wrestle with this changing nature of the retailer landscape, the changing nature of the contract manufacturers that we often kind of work with out there. And so for me, I'm very excited by this space today because I see this great opportunity, but I also see that only a handful of folks really being able to take advantage of that.
Yeah. Well, VMG is certainly positioned to do that. So, Mike, thank you very much. Incredibly insightful. As always, we're grateful to you and your team for the continued support. Thank you to everyone who joined us today. We look forward to seeing everyone next month for our next Third Thursday Themes conversation.
Thank you, Michael. Appreciate being a guest on your show.